The British government has put forward details of a new levy on banks. It's been designed to encourage banks to take fewer risks and will apply to both the global balance sheet of British-based banks as well as the UK operations of foreign banks here. Well, joining us now is Chris Roebuck from the Cass Business School. Nice to see you. So, it's meant to encourage banks to take fewer funding risks. Will it?
Well, it's about changing behaviour, I think. And what they're trying to do is they're trying to get the banks to focus on lower risk and to make investments that are actually better from the perspective of the government in terms of keeping risk low and keeping the performance of the banks high and keeping them here.
But shackling them at the end of the day?
Yes, shackling them to a degree so that you can get some element of return for what they perceive as government investment that's happened in the past. And I think that's the key point. We invested in you, we supported you, even if not directly, you now have to give us something back. And that's in the form of the tax here or elsewhere around the world.
Well, you talk about the tax, because there is a bit of a problem here, isn't it? Because this levy would interact with taxation in other countries, so you could get foreign banks being taxed several times.
Well, this is the whole problem with the way the G20 has worked this. A year ago, we had the leaders saying, we're going to sort this out, we're going to have a consistent approach to banking, and what's happened? They've all gone and done their own thing. So as far as the banks are concerned, it's a bit of a mess. And as far as the regime is concerned, it's a bit of a mess. And the banks are concerned that there could be double taxation. And that's what the G20 should be sorting out.
And is Britain showing the lead here? Are other countries coming up with the same sort of levies? Or is Britain going to be the one that's just standing out here?
Bearing in mind the budget deficits that some countries have, many countries are trying to extract money from the banks, and they'll do it by levies or bonus taxes or whatever. The problem is that if it's not done consistently, any country that steps out of line is potentially going to lose elements of their financial services business because banks are obliged by their duty to shareholders to maximise profit.
OK, Chris Roebuck, good to talk to you. Thank you very much indeed. Talking about shares.